Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, August 6th, 2023. So we saw the polls try to take the CPI numbers and try to twist them in, or the jobs numbers, whatever came out on Friday, but really twist it into trying to be, because it was a miss, but they were twisting it that it was going to be good because the Fed was going to stop, and they tried to move the market higher, and it was up 20, and we ended up closing down 23. And it's just really signs that the bulls are exhausted. They stayed at the buffet just a little too long, and any kind of move to the upside, they're going to get hit with sellers, and they're going to get swatted down a lot easier than what took place really since May. So we broke through this wedge, no real changes. We're getting into the oversold levels. And really, what we want to, again, we're heading into the zone right now that I'm anticipating there'll be some buyers, and that's going to be anywhere between the 44.61 down to the 44.32, and possibly down to 44.16, which is the 50-day moving average. So if it comes down to these levels, maybe if you want to scale out of some, just to kind of free up cash, and we get a bounce and then reshort it, it's up to you. I still believe we're coming down to these levels, but from anywhere in this zone here, I'm anticipating a bounce back up, somewhere into the 45, 40, 45, 25 level. And then from there we come down. So it's just more a matter of how you want to trade it. But we're getting into the oversold levels. You can see momentum hasn't even gone negative, and these are working off of bearish divergences. So the bears still have gas in the tank. Here's another real kind of it's snapshot at showing that that right now that we see a changing of the guard, meaning that the bulls were the ones that were always buying the trend lines and the moving averages. And now what happens, we saw the bulls. Remember what I said after this, that I was anticipating that we were going to find some buyers right at this exact spot. And I said what we have to do is see how what happens when we get up to this to the 45.40 level. It was really that up to the 45.50 was my resistance zone on Friday. And you can see once we got up there, sellers stepped in. So the changing of the guard is, instead of buyers jumping in at the moving averages, we now have sellers. And as I said, when momentum picks up on this, since we really don't have much of a safety net underneath us with the VIX and all that, I think the VIX is still only at like 15, very depressed levels. And if it just gets to normal levels, you still have almost another double from where it is right now. But in any case, there's just too many people got too bullish, and I think they just need to be shaken out. I'm not looking for any kind of market crash. I'm looking for a test down at the 41, 4,200, maybe down to the 4,000. But I do believe it's going to happen in a fast manner, just because of the length of time that they stayed up here without giving this market a breather. That now that when all these buyers that are buying the dips right here are going to end up getting trapped, and they're going to be the panic sellers. So again, just really to wrap this up, the bulls are going to have to get above the 45.42. If they do that, then we leave the door open for a closing of the gap at 45.75. The bears, if they can continue the weakness that they showed towards the end of the day on Friday, what we're really looking at is the next support levels coming in at the 44.60 down to the 44.42. If the bears, if the bulls don't support this, then we're coming straight down, and we're going to start testing the 4400, and possibly even coming straight down to the 43.30 level. So let's see what plays out tomorrow. Let's see who wins this little battle. And with that, enjoy the rest of your weekend, and I'll talk to you guys in the morning.